Welcome back, Straight Live with IG. Yes, we have not disappeared. One day off. It feels like I've been on holiday for a week.
Yeah, one day off. I'm glad that you had a day off. Some of us had to sit and start work at 7 o'clock yesterday morning. Right, I've got to go.
Mate, I saw your Instagram at the weekend. All you're doing is eating.
Yeah, I know. That's basically all I do every single week. I was on a bit of a Guinness and spice bag tour around Irish pubs this weekend.
It was.
What I was doing. Yeah.
What would life be without another spice bag?
Exactly. Yeah, I do recommend Kroll on Bermondsey Street, by the way. Best one I've found so far.
I cannot say anything because I went to buy a pair of jeans yesterday. And I can't get the top button done. I swear they were fine when I was trying them on.
Yeah.
And this morning I went to do the top button up. I'm like, yeah, I'm gonna have to put a belt on there.
Happens to all of us. Wait, hang on. You got to put a belt on to get them on.
Yeah. Well, no,
to keep them on.
keep them.
What were the old buttons not going on?
Right, what's coming up on today's show?
Oh dear.
We've got Luke Moore through with us until 8:30, and then I am very excited about this. So William Nutting of Nut Stuff joining us, brand new guest to the show. He's a good friend of Nick Feingold. Remember, Nick has come in, over 30 years of experience, William the same. And it's going to be really interesting to hear his views on the market, but also his background and theories on investing as well.
Lovely, nice. What a lineup for the day back. We're kind of making it back with a bang.
Back with a bang. Well, what have we got after that, Luke Moore?
After that, it is the All Sessions opening bell. And then we have Tom Bailey joining Aaron Bright for trading experiences. Who's Tom Bailey?
Tom Bailey is from Han ETFs.
There we go.
Perfect.
See?
So he's head of research. So Aaron is the new Angeline.
Oh.
Angeline is in Milan as we speak. I'm sure she's tuning in. Good morning.
Buongiorno. Buongiorno, Angeline.
And then we've got Trade of the Week with Axel, of course, to finish us off. Now, I see the music still going. I know some of you get annoyed with the music still going. So let's have a little poll on that at the moment. Mm-hmm. Do you want music to continue for the first 3 minutes of the show, or do you want it off?
I vote off. I vote we say good morning and then get rid of it.
Or we say good morning, then no music, and then music back on for coming up.
As long as you play what's the really good one before Fast Markets? As long as you play that one, I'm pretty happy.
Oh, it's all kicking off in the room now. Oh, the abuse I'm getting in my ear. Producer Phil saying that's my decision. It's not the voice of the people. Now, and that only time will tell will go as well. So we do have a new member of the gallery team though today. So not only do we have the mighty Terence, the wonderful James, Dr. Watson, aka, we've now got Yanis as well. And this is proving that we are an inclusive employer. We've got a ginger in the studio. I can say that because my beard goes a little bit like that. Just a little.
Just a little bit. Right. I'm with you. I've sent what I needed to send. I'm with you.
Are you? Okay, good.
Sorry, I had to get a couple of bits and pieces.
Doing your job.
Out. Yeah, I had to get some bits and pieces out. So I'm with you now. Good morning.
Good, right. We've got plenty to chat about. We've got the Bitcoin conference that is ongoing in Las Vegas as we speak. Let me see, it's about midnight there. So I'm sure it's just coming to a close. We've got Tariff. Are they on? Are they off?
Wax on, wax off again.
Dull.
You just knew he was going to do it, though, didn't you?
Yeah.
You just knew 50% on Friday afternoon. Was it Friday or Thursday? It just felt too much. And then he backed off. One of my clients told me it's going to be Taco Tuesday. And I was like, what? Taco Tuesday? He said, yeah, because he always chickens out. And I was like, I'm not sure that all adds up, but yeah, sure.
I thought there was a...
We'll run with it.
So Kirky, Kirky, a proud ginger there as well. One of my Scottish brethren. Well, I'm not sure if he is, but ginger. Right, let's go into overnight action and see what's been going on. So who missed trading over the weekend? Come on. Did anybody have a little nibble? I must admit I did.
Did you?
Yeah, I so the story came out, I think it was yesterday, that Trump was considering, or Trump media was considering raising $3 billion to spend on cryptocurrencies. So remember we spoke to the CEO of a Smarter Web company last week, that we did a whole piece on the theory of this. Well, now Trump's seeing people making money and he wants a bit of it. So they are going to become a MicroStrategy. They're going to put crypto onto the balance sheet. This isn't confirmed. This is only 6 sources briefed on the matter. And it could be announced ahead of the big meeting of crypto investors and advocates in Vegas, as it's going on this week.
I mean, I don't know what to say. I don't know what to say. I mean, clearly there's this theme that companies want to get Bitcoin on the balance sheet. I don't disagree with that. I think it's a very sensible thing if you believe that you've got a finite asset and you believe in the long-term story. Fine, that makes sense. The fact that you can pre-announce some of this stuff and that he's got such
I think it's a leak.
weight.
Yeah.
Well, yeah, okay.
I don't think the Trump Media Group said in a statement that apparently the Financial Times has dumb writers listening to even dumber sources. It's going to be one of the Trump family, that, doesn't it?
Definitely. Yeah, it just seems crazy. Everything is leaking out of this kind of presidency at the moment. There's headlines everywhere. It's really, really, I don't know what to say. Yeah, unprofessional. Yeah, that's the right way to say it. Yeah, people would get sacked if stuff like that was leaking elsewhere. Anyway, but what does he do? So he's going to go on stage. You're going to have this talk. No doubt, you would expect things to pump. That he's going to whatever currency he mentions. Because don't forget, there was the five currencies that were going to be part of the original strategic reserve. So Bitcoin, Ether, Solana, Cardano, and there was one other.
Probably Doge, isn't it?
No, I don't think it's going to be Doge. But you'd expect those to kind of get some coverage, which is no doubt reason for them to have a look at pumping. But it's going to be one to watch. I mean, how's Bitcoin getting on for us this morning as a result of this conference over the weekend? We are
a bit dull, 109. So that was 109,000. So I must admit, when that came out, the prospect of even $500 million going into Bitcoin would be absolutely astronomical.
Yeah, here we go. Here are the prices. So 109,200.
Yeah, it dropped to 107.80 overnight, or 107,800.
Yeah, when it came all the way down here to 107.6, and it's been bought straight back up again.
So it's certainly volatile.
Oh, yeah, and the rest. But holding around these highs, it's a firm uptrend. See if you can hold it.
Our friends in Europe, very strong day yesterday. So the DAX was particularly strong. That was up 1.6%. The CAC up 1.2%. The FTSE even looking up around 80 basis points this morning. That's not shown in these futures because, of course, the futures markets were open yesterday. So, about 85 basis points from Friday's close. Then we've got the euro stronger, GBP stronger, and we've got copper back up at 482 after languishing for a couple of weeks, and oil 61.40. So not too different from where we left it on Friday morning.
You've had this kind of where it's a wax on, wax off with tariffs, haven't you? So we're pretty much back to where we were. I'll tell you what is going to be interesting on the open, though. There's been news out in the European automotive sector.
Oh, right.
So automotive sales, let me get the story for you on my...
Tesla's terrible again, isn't it?
Terrible, yeah.
So down 52%.
If I pull this story up here. So car sales in Europe, so you get these monthly figures around who is buying what, and Tesla sales have fallen 49% in April from a year earlier. But I think that's actually pretty consistent because they were down around half last month as well. And it's interesting because you see here, even as battery electric sales have risen by a third, Tesla's not getting any of the love.
Yeah. And I did notice that BYD cut their prices big in China as well. So, so Asian electric names were smashed.
Yep,
on Sunday night.
Reuters is specifically calling out Seik Motor, I don't know who they are, Mitsubishi, and Mazda not getting any love. So an interesting kind of give and take there.
But also petrol cars dropped by over 20% as well, which is interesting. 20%. Yeah. So the transition is happening.
At least in Europe.
Yeah.
Because this is, of course, ex of the UK. But yeah, it's you can see it starting. You can see it starting. But it comes up with the age-old adage of it's all very well and good having a battery-powered car, but how do you get the power to generate to put inside your battery-powered car?
Yeah.
You know, a big critic would just say you're moving the goalposts away from making you feel bad into putting it onto the grid.
Yeah.
So then you start to think about the power mix. You start to think about, you know, is nuclear the answer? You know, there's always stories around SMRs at the moment, small nuclear reactors in the UK and around the rest of the country, with Rolls-Royce and everybody moving around as a result. So, yeah, that is a story that will continue to roll on, but interesting to note nonetheless.
Right, good morning to you all on the chat as well. Excited to have you with us today. We missed you. Didn't know what to do with myself yesterday, apart from get smashed at paddle.
Oh. There you go, Arthur Fox Haig, TACO. Trump always chickens out. That's what it stands for.
That
one
makes more
flew
sense.
straight over my head.
Yeah. Good morning, Cucumba. We've got an idea of a bolero. Might be better pick for the intro music. We'll have a look at that. Maturin, good morning. Boise, good morning. And Big Mike as well. Gents.
Morning, morning.
Sounds like Big Mike might have a question for us. So, yeah, if you are not subscribed, then please do subscribe in the chat. I won't bang on about it this morning, but we will have a few new viewers with Mr. Nothing coming in as well. So,
Be good.
stuff. Right. Parky 1977 saying still recovering from the Scottish Cup win.
The mighty Aberdeen winning the Scottish Cup. The mighty Aberdeen. So my in-laws are from up in Aberdeen, and I've got to get myself down to Pittodrie. Apparently the pies are next level. The Pittodrie pies are supposedly the place to be.
That spice bag's really got you focused now, doesn't it?
Yeah, high quality food only.
Right, let's have a look at what the newspapers are saying this morning then. Front page of the Financial Times is actually a little bit worrying. UK turning to shorter term borrowing as the fiscal pressure mounts. And the head of debt management actually saying that the demand for long-term gilts is waning. Now, that's a worry. Of course, it's not UK specific at all. That is the case in Japan, in the US as well. But, you know, should we start to be worried about that?
Just break that down for me then. So shorter term debt, we know, is much more sensitive to rate increases and decreases.
Yeah.
But at the point that they lend, that's a fixed interest rate on that particular bond. So even if they cut rates, you're still going to be on the hook at those higher rates, I suppose, for one from the
that would be locked in. But it's
locked in.
I mean, it makes sense. Look, a lot of the rest of the world do short end management a lot more. We're probably actually an outstander in how much we were doing at the long end.
Right.
So it's not the actual story's not that concerning. It's more the fact that
Long term
pension funds aren't there. You know, is this just? There's a couple of things that worry me at the moment. The fact that UK inflation was higher, right? Is that going to be a global phenomenon? Phenomenon. Phenomena. And we are starting to see concerns about demand for this huge amount of debt.
So are we saying there that the demand for long-term gilts is primarily from pension funds, at least domestically?
A lot, yeah.
And do you think that whilst there's all these headlines around the Treasury trying to change or mandate the way that the pension funds hold UK-specific assets, is this a bit of a voting with the feet? Is this if you're going to make us buy UK stocks, UK funds, UK everything else, we're going to buy less of that because we're going to pick up our UK allocation elsewhere?
No, I think it's a lot more simple than that. I think it's just concerns around Rachel Reeves' ability to
continue to finance it.
So the prospects of UK specific, but also across the board.
They haven't got much room to move, have they?
No,
at all. And you see it, right? Because the pound is now at 135, 134.90 or wherever it is.
Yeah.
So it's
135.80. Yeah.
135.80. Yeah. The fact that
because I'm short.
The market's saying, you are not going to be getting any rate decreases anytime soon. And you can see that because you've got, the dollar's been some of the weakest it's been. I think the dollar had 4 or 5 weeks of successive sell-offs.
Wow.
You've got the dollar index now sub 100 and looking at 99.50 as resistance now.
Yeah. Let's have a look at that.
If you pull that up, have a little look. Oh, nope, we're on my screen. Do you want to pop onto Rich's? There you go.
Right, let's have a look at that. So we have a look at the daily.
Yeah, pull it back, and you just see this weakness that we've seen all year.
So there's about
all year.
That's a 2-year chart.
Bearing in mind, a lot of this though, the biggest weighting in the dollar basket is against the euro.
Yeah.
Euro and then yen and then sterling, I believe.
I think so. Yeah.
Yeah.
And then all the rest. But it's interesting, isn't it? So it peaked. Absolute peak was on about 4 days before Trump's inauguration.
Before the inauguration, is that right?
Wow.
Doesn't surprise me. But they keep saying they have a strong dollar policy, but everything they're doing is not strong dollar, is it?
No.
They don't mind having a weaker dollar to encourage more investment coming into the US. So it's getting walked down slowly. I mean, it looks fast, but realistically, I suppose it's fairly quick.
Yeah, it's a 10% sell-off, isn't it?
Yeah. I don't know if I'm concerned about that necessarily. I don't think a weaker dollar for the rest of the world, bearing in mind how indebted the rest of the world is with US debt, a weaker dollar, I don't mind that so much.
Yeah, true.
I don't mind.
Two-tier Kia saying Rachel from accounts will raise taxes and create a recession.
There's a story in, I think it's the Financial Times about this morning, about how much of a lack of headroom she's now got.
Yeah, we could do with a bit of GDP coming through.
There or in the Telegraph, there was a story about, she basically has got zero headroom, and they're thinking about another 30 billion in tax raid in order to fund more benefits. It's just, I don't know where the money's coming from. That's the problem. I don't know where the money's coming from. How's the FTSE 250 trading? I mean, the 100's international still, but I'd be interested to see how the 250's trading as a more of a domestic index.
Oh, wow.
Strong. Very strong.
I mean,
that's about as V as you can get, right?
The gap down, the gap down does, that's more like a Tesla emblem, isn't it?
Well, actually, if we're honest, this is trading flat. Because if you go back, I mean, that's just ranged for the longest period. X of the stress that we've just seen. I don't think that's necessarily that interesting, is it? It's just basically pulled back into...
I think I'll be able to get out now because I remember buying it in my pension about here.
Good.
I don't think I was ever up on it.
Good.
So that might need a bit of thinking.
How's, on a different note, I'm thinking about adding some Alphabet to my long-term portfolio.
Right.
So off the back of their announcements last week, you know how they announced kind of 8 to 10 different AI incubators they've been working on?
Uh-huh.
They've got one that they've called Google Beam. I'll see if I can get it up on my screen. It looks so cool. Google Beam.
Well, it's funny because Terence was actually showing me something this morning as well on the AI video.
Yes. Yeah, this is it. So if I can chuck this up on the screen, a little bit off topic, but they've announced a screen, and there's several cameras up here and along the side, and it makes the person you're watching look 3D, and it makes you look 3D to them. So it's as if you're sat opposite them in a window.
Got you.
And it live transcribes and translates for you in real time. So you can be sat opposite someone, looks like you're literally sat opposite
worrying,
them,
isn't it?
and you can speak Spanish, French, whatever language you want to. It's very cool. Very cool. But I think the market's starting to look at Alphabet as a bit of an AI holding company, as opposed to just the search business.
Well, I mean, it needs to, right? Because the search business is a real risk.
Yeah. Well, this is one of the things that they were talking about. They've now introduced an AI mode. So it now looks like a Perplexity style search where you get, an answer to your question and then sponsored links. You can have a little look at everything else.
Right.
And here's the chart.
There
So
we
this
go.
this is that dip that you saw with the rest of the world. Then their advertising revenue knocks it out of the park.
Yeah.
And then this recent lift over the last week or so has been post announcements of these it was about 10 different AI stories. There's a fantastic, I know you're a fan of the All In podcast. There's a fantastic hour-and-a-half interview with Sundar, the CEO.
Oh, is there?
Yeah, just outlining their thoughts.
Right.
And that's what's got me.
That'd be worth a listen for sure, yeah.
Definitely worth a listen. Could not recommend it more. Is there much out of the UK this morning? I don't.
Not that I could
there
see.
is.
No, I don't think they like the old bank holiday, making people work on a bank holiday.
Let's have a little look. So we have had some drug announcements out of AstraZeneca. Imfinzi has been recommended in the EU for bladder cancer. We've got Forexpo just being highlighted here with the Russian attack on Ukraine. Forexpo, of course, the domestic producer of cobalt and rare earths.
Trump wasn't best pleased with that, was he?
He was not best pleased with that, so keep an eye on those. Hochschild Mining, their CFO has stepped down with immediate effect. And gold has been down over the weekend, so Hochschild Mining, keep an eye on that one. I know Andrew McKelvey is probably one of your names out there. Alpha Wave, there has been a deadline to their bid. So there's been an M&A story there that's been extended out to the 2nd of June, which is, to be fair, only next week. What else have we seen? DCC PLC.
What's that?
DCC.
Comics.
Is it? Anyway, they've announced a 100 million share buyback today, which starts. So that'll be one to keep an eye on the morning. And what else have we got? Bodycoat, their group revenue down 6%. They backed their full-year view, but they said the second half is going to be weighted in these numbers. So not much.
You know, we're desperate for news when we're coming up with this stuff, don't we?
There's not really much. I'm trying my hardest here.
Right, but I was going to say, should we just go to a break instead? Right, Burberry is it's been raised to equal weight, £10 price target. That's not giving you much there, really, is it? But yes, Burberry currently trading 960. So yeah. Right, let's take a quick 2 minutes, go put the kettle on, and then what I would love from you is tell us the highlight of your weekend. Mine was definitely not getting beat 6-1, 6-1 in a game of paddle by a couple of Tunisians that absolutely took us apart. I knew I was in trouble when we were doing the warm-up and the guy came in and absolutely smashed one straight at me. In a warm-up.
In paddle?
In paddle. I was like...
It's not bloody Wimbledon paddle.
Mate. So, yeah, 6-1, 6-1. Good.
And that was after your weekend-long coaching.
Yeah.
Weeks back.
No, these guys were good. If you know the app, the paddle app, then these guys were about 1.6s, whereas I'm more like, 0.8.
Right. I imagine, is that some kind of like...
The ranking, really clever, but it's, I should not have been playing them. And so let us know what the highlight of your weekend was. Have we seen a monkey man this morning? Just checking.
Just checking.
Just checking.
Swinging around in the jungle.
Good stuff. Right, we'll see you in 2 minutes. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Yeah, just checking the news headlines in the City AM this morning. Also, some really interesting stories, yes, and also some inspiration from the Chelsea Flower Show as well. So
there you go. Look at that. They're everywhere in the office, in case anybody's asking.
Yeah, absolutely.
Yeah, there's none on the streets because they're all in here.
Exactly. What's the point in buying them all and then bringing 40 into the office?
Dear.
Right, okay, well, yeah, so we've got 3 minutes to the off, but we do have breaking news. Dr. Watson's got a date tonight.
I just heard the story.
So he's
a new app, right?
A new app. So if your name is Lara and you're on the Breeze app, run a mile. Do not go up the Shard tonight.
Poor guy.
So yeah, so James is on his first date tonight. So that's... I'm glad he's fully focused this morning.
Welcome back to the show.
Yeah, tune in tomorrow to find out how Dr. Watson gets on up the Shard on his first date. We will update you all.
Do we have any upgrades and downgrades to bring this back to some sense of normality in the morning? You said we've already had the Burberry one.
Yep, we've had the Burberry one is the main one that I've seen.
Premier Foods.
Oh,
so Premier Foods, who actually do own Primark, unlike no, it's not Premier Foods. Which is I did this again, didn't I?
See, you're determined for them to own it, though.
What is it? It's who owned Primark? It's something. Associated British Foods.
ABF.
Yeah, sorry. So Premier Foods have now been cut to a sector perform at RBC, catching their first cut in a long while. Jupiter, the fund management business, they've been added. They've been upgraded to an ad at Peel Hunt with a 90p price target, and Haleon, the ex-GSK spin-off, they've been raised to an outperform at BNP Paribas. So we'll see how they go.
Then we've got IMI cut to neutral at Goldman's, and some Assa Abloy raised to buy at Jefferies. They believe that they're recovering from the cyclical lows.
Okay.
Good. Right. Boston Frank reminded us that Nasdaq futures are up 1.3%, and the US 10-year is looking lower. Let's have a quick update on the bonds there. You can see that 30-year in particular is looking well below 5 now, 4.96, and the 10-year 4.45. So yeah, so a little bit more positive, a little bit more constructive. But what I wouldn't like to see at any point is any hint of inflation coming back.
Yeah, but one data point doesn't make a trend. Let's be honest. One data point is all we've got so far, so we've got to keep an eye on it.
What would you, if you were going to take an over or under in inflation being higher or lower, what would it be? Yeah, let's stick this out as a poll. And no, only time will tell.
I'm going to say that April was super hot.
Yeah.
What do you do when it's super hot? You go out, you spend more money as opposed to staying in. And I wonder whether there's just a little bit of seasonality that's come through. There was some tax changes that kicked in April. So don't forget, this is the first time that we've seen the employers' national insurance changes, I believe.
Yeah.
So there's going to be some seasonality in there. I would go with it being not a complete change to the inflation story.
Yeah,
just being a blip.
Poll question is, what's your next move in inflation? Do you think it'll come in higher or lower than where we are? Higher or lower than where we are in inflation? Right, let's get off to kick off the week on the London Stock Exchange and others. Other exchanges are available.
What
if they don't
do we
sponsor us.
have here?
Right, rank group, looking up. I think that's a dodgy print there, just on a wide margin. St James's Place, the leader, up 2%. Burberry up 1.7. Ooh, Luke Moore's favourite Scottish Mortgage Investment Trust.
There you go. Get me back above 10 quid, please. It doesn't surprise me. We had risk on yesterday. This is just going to now filter through into our stocks here. Rank group up 4.6. That's interesting. Let me see if I can.
I think that's just a wide spread there, isn't it? It's a 8% spread.
Yeah, but okay, let's see.
Flutter up 1. Lloyd's getting back up there. Is Lloyd's going to touch 80 pence in this next week? Is Lloyd's going to 80p? British Land up 1%. Let's see.
Rank is up. It's a wide spread, but it's only traded 1,500 shares. That break above 74, 75p for Lloyd's has been historic, right? This is above all-time highs, I think. Is it? Or pre-2008?
Yeah, highs. New world.
New world highs, 78p.
WH Smith also starting to climb back up, 10.35 with their £2.40 packet of discos, clearly helping the share price there.
Packet of discos?
Packet
when was the last time you had a packet of discos?
Every single flight I get.
Yeah?
And every single train journey.
What flavour?
That has to be salt vinegar.
Has to be salt vinegar. Yeah, good.
I
disagree with you there.
Right, Marks and Spencer's decent recovery as well, £3.80.
So the top of the FTSE, we've actually got Melrose Industries up 3, IAG up 2, DCC on their numbers, they're up 2, and Games Workshop.
Oh, it's back up.
Games Workshop back up at 157.20, which is up 2%, so at the top of the pops. There must be some news in airlines that we've missed, because EasyJet's up, IAG's up, and Wizz is up. Is that going to be something to do with the oil price, which is a little bit lower today? One thing we haven't mentioned is OPEC have announced that they're bringing forward their meeting. So they were due to meet at the weekend. They're going to start their meeting now on Friday. Only one day. Yeah. But we know last week when we were live on air, they of course said that they were going to increase production whilst prices are already under pressure to increase market share. So that's going to be one to keep an eye on.
Do we sell coals and oil?
What, like a 70 strike? 75?
That's exactly what I was thinking, yeah.
Could do.
Feels like if it gets anywhere near there, it's just yours, as much as you want.
Yeah.
Right, okay, so let's have a look at that. On the downside, who are the losers today? Well, it's Fresnillo. Of course, on...
Silver's down 1%, gold's down 1. Silver's down 1.2, gold is down 1. So it makes sense that Fresnillo's down.
Iron Brew. People not buying Iron Brew in the sunshine, clearly. AG Bar down 90 basis points. Centrica on the losers. Bats and Ricketts.
Antos as well. Antos not down, considering copper's down, but definitely lagging. Definitely lagging the market.
Right, shall we...
What's going on in Europe? Are we seeing any of these motor companies moving around?
Adidas. I'm starting to get more and more bearish on Adidas. Exactly. I think we were talking about it, weren't we? Every single shoe looks the same.
I'm glad that someone else has seen it because I've been saying this for years. I haven't had a pair of Adidas in a long time, although their new running shoes do look pretty cool. And I don't know what they're called. Hang on, I'll find them.
Okay, have a look at those. Rheinmetall up another 2%. Rheinmetall was up 3% yesterday, as was Siemens. And Rheinmetall kicking on, really impressive. Is this a new all-time high, in fact? I think this is a new all-time high for Rheinmetall. Wow.
Look at that. Beast.
Oh, my goodness. Oh, I knew a very smart German person involved in those ones.
Interestingly, the FT News Briefing, which is a podcast that I would recommend to everybody, did a whole investigative journalist piece this morning on Ukrainian arms deals.
Right.
Basically being defrauded out of money. So it was a whole investigative piece that all this money they were raising
by the Ukrainian government.
No, it was Ukrainian government spending money and buying from other, dealers and providers and all this kind of stuff, and they were throwing money out the door and nothing was coming back. So they've just basically been. It was a whole piece. I'm surprised there's not an article on the FT this morning. But keep an eye on that. I wonder if that is going to have.
I'd be amazed if that comes as a shock to anybody.
Yeah.
You're giving a country hundreds of billions of dollars And we can't even do it in the UK with 20 million trying to buy masks for COVID without our own politicians getting the hand into the cookie jar.
Yeah.
I mean, if you think we can get hundreds of billions to Ukraine and some of it not
go missing.
Yeah.
Yeah. No, it's interesting though. It's about 10 minutes podcast. Definitely recommend it. These are the Adidas shoes that I think look pretty cool. It's the first time that you've seen the 3 stripes put somewhere that's not.
Let's see the other colours. I wouldn't be. Those would get
black?
too dirty in no time.
I would have only in white.
There they are. That's the bad boys.
Lucid lemon, core black and matte silver. 130 quid. Do you reckon?
How much?
130?
130. You're probably in line with Hawkers and Ons, aren't they?
Yeah, probably. But they seem to be getting a bit of a moment on social media because of the big 3 stripes. Are they going to make Rich any better at paddle? Comment from the gallery there.
Dr. Watson getting his own back here. Good stuff. So why don't you wear those on your date, James, and you'll see how you get on. Right.
Train line up 4.6. Wow.
Yeah.
Results are in. Let's have a look.
Yeah, there you
Poll
go.
results are in. Sorry, excuse me.
Next move on inflation. It is 64% of you think it's going to be higher than current expectations. 17% think lower. And that's on 28 votes. So
We need more people to vote.
here we go. Right, Andrew McKelvey updating us on our subscriber target for this week. We have a running total, remember. It is the price of Rolls-Royce.
That's the target.
That is the target.
Okay.
We have to get more subscribers than where Rolls-Royce closes on Friday. Well, where it is live on Friday morning.
850.
Currently 850. It's up 2%. We got done
Work to
for
do.
another 16 subscribers.
We've got work to do. I like that.
yeah.
That's a great idea.
Yeah.
That's a great idea.
We're currently on 775.
Okay.
So we need some of you who are not subscribing to hit that subscribe button, or we need a Rolls-Royce profit warning. One of the two. Right, what are we going to talk about on fast markets today, Luke Moore? What kind of thing? I was in Ralph Lauren at the weekend, and
we spoke about this last week, though, didn't we? Go on. What? So you were in?
Well, I think we take a look at those.
The one on Bond Street.
No, I was in Westfield.
Oh, okay. Okay.
Yeah.
The one in New Bond Street. Nice. Coffee shop in there as well. Ah, if you fancy spending £5 on a flat white. I've been doing that once.
Oh dear.
Okay, we'll have a look at Ralph Lauren.
Lululemon.
Are we gonna?
Abercrombie. That's the 3 I'm going to look at today.
Okay. Are we gonna save the Nvidia coverage for tomorrow?
Ooh.
That's the big risk event.
Well,
this
no,
week.
because you're not here tomorrow. So I think you should dive into your view on fast markets.
Okay. All right. We'll take a little look at video and fast markets. Adidas, we're not going to look at those shoes again because we don't think it's going to make you any better at paddle.
I am tempted to knock out a short though.
Where are they trading?
217 euro.
217.
Which is off the highs. They were as high as 250, but I think they certainly struggle to continue the same kind of growth. So you'll get slowing growth, but do you actually get a slowdown in numbers completely?
I tell you what, we started talking about it before the bell. Let's talk about Alphabet.
Yeah.
Let's do that. Let's do that.
Right, good. We'll take a very quick 2-minute break, and we're going to come back running into fast markets.
See you in a sec.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers you
Welcome back to Fast Markets on this Tuesday after the... Sorry, did I just shout everyone's house down? I'm really sorry about that. Welcome back. It's the 27th of May and welcome back. So Fast Markets, what are we looking at? Ricardo.
Right, yes, so we're going to go through Ralph Lauren, Abercrombie and Fitch. We're going to go through
Alphabet.
Luke's account and trading thoughts on Alphabet.
Mm-hmm.
And then we're going to look forward to some NVIDIA.
Yeah, we're gonna get a little preview for what is no doubt going to be the biggest event of the week, tomorrow's NVIDIA results, of which I'm working the late shift. So if you ever need anything,
brilliant.
I'll be there at 9 o'clock watching it happen.
I'll be there for you. Right, so there is the chart of Ralph Lauren. Some wonderful service from my new friend.
Yeah.
In Ralph Lauren.
Did you get added to the WhatsApp?
Oh no, I didn't get added to it. I got a personalised email.
Here you go.
Which I was quite impressed with.
Yeah, I wanted a cap. Being a bit of a geek, they had this really nice vintage coffee. So they're Joe's Coffee is what it was called, or Ralph's Coffee. Anyway, couldn't get it in London, so I had to get my father-in-law to get it from Houston when he was over there, and they flew it back.
Right.
But when I was asking
a problem,
no problem. No. But the guy,
we have no problem.
Houston, we have no problem. But the guy put me on their WhatsApp, and so I occasionally get these little messages. This is what's in. This is what's in. This is what's in.
Cool.
It's good service. You
Yeah.
know, and I imagine that's all automated. It's all AI. It's going to be based on the fact that I wanted a cap once, and I now get 500 caps sent to me. It's good. Like it.
And Jaylon and her boyfriend were both into trading. So her boyfriend had done a trading course.
Jaylon being the person that helped you.
Person that helped me. Subscribe to the show.
Nice.
There and then. So,
there you go.
Good morning. If you're tuning in, give us a shout. But what do we think of the shares? Well, there is the performance that we've seen. So 274.
Chart back.
I'd be happier to buy on weakness, certainly. So I'd be looking down at around these gaps here. Closing that second gap is 240. Mm-hmm. So I am looking to sell the 240 puts out to July the 18th. And for that, I will receive a nice $4.20, $4.30, something like that.
IV rank's quite low.
Yeah, it is. That's the thing, isn't it? But 20 is still doable.
Just about. I mean, it's
post numbers.
It's pretty low. So we'll, yeah. I mean, $4. How far out of the money is that? $30 out of the money. Picking up 4.
Yeah.
270's current price. 240. Yeah.
I'm happy with that. With the stock I want to buy anyway.
You've got an 87% probability of profit on that, which is quite nice.
Oh, then I'll go bigger.
Probability of making at least 50% of those $4 is 94%. That's the magic of selling just outside the expected move.
Yeah.
Yeah. And for those that don't know, we're just looking at the very bottom right-hand corner. I don't know if you can zoom in on that. Just to see the statistics hit down here in the bottom right. So just to give you another quick kind of platform walkthrough here, POP, if you look on the left-hand side, that is the statistical probability of this trade making at least 1 cent of profit. And then P50 is how likely you are to keep at least 50% of what you sold it for. So you've got a 94% chance of making at least $2. That's what that says.
And yeah, and basically to walk you, for those of you that don't like stats, that's just basically the delta, right, plus the premium that you're receiving, right? So that's why it's the 87% there. Yeah. So on the other hand, I don't think that this is suddenly going to race off. So I would be happy selling something like the 320 calls as well.
And a bit of a strangle going on.
And a bit, yeah, turn it into a strangle.
So a strangle.
So then we're getting $6.50 when it's actually open, maybe nearer $7. And, you know, that's starting to look decent in 52 days' time.
Yeah, and that's probably with a low IV rank, the chance that you're going to get, you know, those levels broken is lower. And what is this, a 52-day? Yeah.
Yeah, 52 days.
A bit.
So,
okay. Interesting.
Yeah, happy with that one. Right, Abercrombie. Let's have a look at chart on that. I got hurt in this one earlier on in the year because I was a buyer. Oh my goodness, they're at 73. I haven't looked at this for about a month. Wow.
You rank up there at 80 as well. So these guys have been absolutely killed.
Wow.
I mean, I imagine these guys are getting killed on tariffs chat. You know, supply chains, stuff being produced out of the US.
Yeah, but most tariff stuff's had some kind of bounce, right? This is bounced from 67 to 73.
Long gone since my Hollister days. Since my Hollister days. Although I saw them open a new shop. They've opened a new shop on Regent Street. I was walking through yesterday. So they're still developing the brand and still recovering from all the issues they had before. And I think their clothes are getting better. I do think the quality's decreasing.
But it's, you know, when are you calling that from? Because look at the ramp up that we had in this stock. It went from basically where we are, it went up to 180 and it's come all the way back down again. So have they been given the benefit of the resurgence in late 24? But, you know, happy to sell puts.
I'm surprised they look so weak, actually.
Yeah, I am.
I'm surprised. That's probably the first stock I've seen that hasn't had a tariff bounce.
It reminds me of Hoka, and even Hoka have had poor numbers, and even they've had more of a bounce than that.
Yeah, I'm just going to take a look and see what our tip rank says on it, what the ratings are. ANF is the ticker.
Oh dear, oh dear. Chart off, thanks guys, because we've just seen a message from Maturin. I haven't actually looked at the stock this morning yet. Oh, stop.
What are we looking at?
Oh, we're looking at Smarter Web Company is now trading 91 pence.
Goodness. Wow.
So a reminder, we had Andrew on the show last
2 Fridays ago.
Tuesday.
No,
it's a week.
But it was a pre-recording. It was recorded on the
we had him on the show.
Yeah.
On Tuesday, and the stock has now gone 200% higher.
Do you know I was a dick for a tick on these?
Yeah.
I saw it moving around. I think I saw it from 21 to 30, and I thought I've got a limit order still working GTC at 25, and it's just gone. But all I could say in my head was the FOMO podcast that me and the guys recorded before Christmas. And if I was, those animal spirits were like, you got to get in, you got to get in.
Yeah.
I'd decide to stand back, and it's going to cost me a couple of quid in this instance.
So the real tricky thing you have now, right, is that it's trading well ahead of the timeline of what he has to do. So he raised 6.8 million last week, which means he can buy about, in total, you can buy 150 Bitcoin. Now, 150 Bitcoin gets you up to about a 12 million sterling market cap. The market cap here at 91 pence, a 12.5 million NAV. So his market net asset value is 12.5 million sterling. The market cap must be
120 at this point.
Is it?
It's 120. 119.85.
I think that's yesterday's.
It could even be yesterday's.
Yeah. So you're talking about 140 million. So it's over 10 times the MNAV now. He's doing an incredible job, but just be wary about buying in at this level. You do risk. It's priced for perfection. Everything would have to go perfectly over the next 3 months without a blip, without Bitcoin coming off at all, to warrant this share price. So buyer beware.
Yeah, it's a bit too hot for me.
And seller very happy.
Yeah, still got some.
Do I?
Yeah. No, man never tells.
Right, good stuff. Maturin up 200% in 1 week. Well done, sir. Muy bien. Oh no, James bought at 45, changed mind, it sold at 44.5.
James, I did the same with Bitcoin. I bought Bitcoin at 6, sold it at 12, thought I was a rock star. Had a house to buy.
That's
I only bought like smalls though, but for me that's my greatest one that got away.
But yeah, I'm shocked it's quite up there. I had a price target of 73 pence in mind, and this doesn't quite make sense to me.
Okay. Well, let's take a look back at the ones we said for fast markets.
Yeah.
Let's look at Alphabet. Let's look at Alphabet first. We'll see if we can get onto NVIDIA. If not, you guys can cover NVIDIA tomorrow.
Go for it.
So what I'd like to draw your attention to, so this was from last week. You want to drop this up on the screen, please, gentlemen? That's the chart. I was going to show you the blog. So Sundar Pichai, the CEO of Google and Alphabet. Now, originally, we changed from the back a couple of years ago when Google changed from Google into Alphabet. The whole point of Alphabet was that each letter could represent a different project.
Oh, I didn't know that.
Yeah. So Google was obviously part of one of these letters, and it was if the G was part of it, it was this all kind of alphabet soup. So they've since been fairly criticised that the search model is going to be left behind, right? We've used Perplexity on this show. Yeah. Whilst in real time to try and search things out. So how is Google going to defend their moat? And they announced last week, what's this? 1, 2, 3, 4, 5, 6, 7, 8 different things. So Google Beam, we've already mentioned this screen here where they've partnered with Hewlett-Packard to bring you instant translation and 3D modeling within reality. They've then got something they're calling Gemini Live. So this is going to be integrated into glasses, into devices, so that it's giving you a real-time feedback from AI in the real world. Agent mode. Now, agents, you can think about these as little tasks that you can get it to run for you. Personalization, basically, it's going to get to know your emails and everything. And then this is the big one, the AI mode in search. So they're going to get rid of the I'm feeling lucky button, and they're going to introduce an AI search button. So it does it all for you. And I actually used it at the weekend to help plan a trip in a couple of weeks' time. So I was using it to kind of pull on Google reviews.
What are you off to now?
I can't tell you that. It's a stag that I'm planning, so I can't.
Oh yeah,
tell.
of course. Yeah.
Because I can't come to the Tasty event because I'm going to be away. But it was I was trying to find some places in this location that I'm going to, and I needed Google reviews. And it was pulling it in and peer. I gave it all of my criteria, and it gave me 5 or 6 different places to look at, and it's pretty cool. It's pretty cool.
So what are you going to do with the stock?
I would like to buy it, but I'm thinking about it now as an AI ETF that's got a huge search business funding it, which is the way I'm going to start to think about this. So we're trading 170 now, 160, 168. So I know that that'll be a little bit higher as the US market picks up a bit of a stock yesterday. I wanted to do some covered calls on this, and I was doing some research on this yesterday while I was working, and to do a one lot. And this is maybe something that clients are going to come into contact with. To do a one lot, it's going to take about $9,000.
So that's buying 100 shares.
Buying 100 shares and selling a call and it was around the 52 days, and it was up kind of 190.
Right.
So that takes about $9,000 in buying power, which at the moment I don't have. So I was thinking about how I can make it a bit cheaper, and this is why I think it's worth discussing on the show. And we just said off air, would you turn this into a bit of it's a jade lizard, isn't it, with a covered call with a sold put just below it?
Right.
Is that the way to look at it?
Is that how you fancy it? Yeah.
Yeah. So we'd look at a 52-day, and we would tee up a covered call. So if you use the strategy builder at the top to set up a covered call for me.
There we go. Right.
So in here, and you go short covered call. The second.
Short the jade lizard now?
No, because then we can add it in.
Okay.
So if you do the short cover call here. Yeah, and I was looking at that kind of 190 level to collect a couple of bucks. So just drag that short call a couple of ticks higher.
There we go.
And you can see there, yeah, the buying power is about $8,000. So the question is, how do you make this cheaper for you? So would selling a put below help us here? Or would you?
No, I think that would actually make it more expensive because you've already got the stock.
So
you're putting more risk on.
So how would I make this cheaper from a buying power perspective?
I think it's just because you are buying stock.
It's because the share price is quite high.
Yeah.
You buy at least 100 shares.
Yeah, because you're buying 16,000 of
stock.
exposure. Yeah, so that's all it is. It's 50% of that.
Okay. So could you, if you buy something and use it as a bit of a spread, you can't really do that, can you? Could you turn this into a poor man's covered call where you buy an at-the-money call? Would that be cheaper than buying stock?
Let's try that, shall we?
Clear that. So what we're saying here, instead of buying shares, buy a 1 delta call option, which gives you the equivalent exposure to 100 shares, and then sell a covered call at the top.
Yeah.
That work?
So, right, so let's
try that and then sell the 190s.
Yeah, there you go. It takes it down to 4.
Okay. Okay, so you're getting a similar P&L payoff.
Yeah.
Yeah, okay, interesting. That might be a way to do it then. And it's getting a bit cheaper the closer you come in.
Nice.
Cool, there you go, interesting.
Right, wonderful. So we have William awaiting us.
William in the wings.
William in the wings, very good. So we're going to go to a quick 2-minute break. We're going to get Luke. Maybe you come in tomorrow and have a chat about NVIDIA.
Yeah, okay.
Yeah, put you on the spot.
Yeah, definitely. Considering I'm on a late shift tomorrow, so the show's definitely going to
Oh, really?
Yeah, you can dial me in, but I might be at the gym.
Shame.
Yeah.
And then...
Who have you got on tomorrow? Who can do it?
Yeah, tomorrow... we've got Piers coming in as well. I have to remember whether it's tomorrow or
you've got Piers on
Wednesday.
Thursday, because today is, of course, Tuesday.
Yeah.
Tomorrow you've got Ronaldo. Ronaldo's coming in. You can do it with Ronnie.
Great. So we'll do the preview with Ronnie, and then Piers is coming in for to go through those NVIDIA results with us on Thursday. Right, 2-minute break. We'll see you shortly.
See you later.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's on a demo account. Open an account today, join the conversation, and be inspired to make moves. Right, welcome back, and a very big welcome. First time on the show. Will, how are you?
Very well indeed, thanks, Rich. Thanks for having me.
And you are the author and founder of Nut Stuff,
I am.
which we'll get into a second. But you've also been in the city for almost as long as Feingold, haven't you?
Nearly 30 years, actually, yes.
Right. Yeah. And how did that first come about? What got you interested in markets in the first place?
So I left school, never went to university, and I was a soldier, and I did soldiering for 5.5 years, and
Oh, wow.
It was a pretty dull time to be soldiering. But I ended up in Berlin as the war was coming down, so that was sort of good excitement. And I came out and I realised that I could sell stuff to people. And I thought, well, I could either sell drugs or bombs and missiles, or I could sell equities. And I thought that ethically, probably the most honest one was selling equities. With the benefit of hindsight, I'm not quite sure. So I did a few things in industry, and then I ended up getting a job at Fleming's.
Right.
And I sold Japanese equities. I really worked on the sales trading desk, actually. I was told to take a Japanese analyst down into the canteen at Fleming's. And I made the great mistake of letting her go ahead of me. And it was the first time she'd been in London, and I saw her scoop custard all over her roast lamb. And I remember thinking to myself, there's some real cultural differences here. And I had to sit watching her eat her roast lamb. I thought, maybe Japanese equities are not for me. And so I moved, and then I ended up doing US markets and did US markets for 25 years.
Okay.
Through
a number of
loved
houses.
it. Yeah, started at Cowen. We got bought by SocGen. But I was the last employee of Cowen in London, and then ended up doing kind of Montgomery, Bank of America, Lehman, Oppenheimer, and then latterly at Stifel. And then left to really kind of take what I'd done inside as an institutional side, which is Nut Stuff, writing this letter that I wrote to investors. And I suddenly thought I could basically take this, do it independently, without oversight, without to a degree, without compliance, but more importantly, not being part of a hierarchy. And not being part of a hierarchy today, I think is a very valuable, it's great value add.
Absolutely. I made the exact same decision back in 2016. I thought, the writing was on the wall with Credit Suisse at that point.
Yep.
And we had Tidjane Thiam come in, who was meant to be the second coming and definitely didn't turn out to be so. Now trying to go for president of the Ivory Coast, I hear.
I saw that.
But yeah, so I decided to leave the city. Was unfortunately dragged back into Macquarie kicking and screaming in 2018. But that signed and sealed it for me. Much better outside of that corporate structure. But you've gone on to still go down the kind of idea generation mode, haven't you?
I think the reason this came about was because I realized I wasn't actually that intelligent. And what I found was when I sat inside equity houses and I listened to analysts and I listened to companies, I thought that the way the story was told, the way it was written in research, the way strategy was written, was really so unintelligible for most people. Yeah. And when I went and sat in meetings, and I was lucky enough to sit in meetings with, you know, the guys at Edgerton or Chris Hone and his team at TCI or James Hambry or a whole bunch of, you know, smart stock guys, they used to simplify things into such to an amazing degree. And I kind of looked at this and I thought, could I take a bit of kind of English comprehension and apply it to financial assets? And then I thought, stocks don't really move in a vacuum. They move because of what's going on with politics, geopolitics. You know, everyone's always trying to hunt yesterday's prey rather than tomorrow's prey. You know, the old adage of, you know, go to where the puck is going rather than where the puck's come from or where it's at. All those kind of cliches. And so I sort of sat there and I used to look at our equity research and I used to think, well, how do I explain a complicated semiconductor company in terms of swimming pool chemicals? Because most of my clients, I never had a swimming pool in those days, but lots of my successful clients did. Yeah. And so it came about of really a kind of nut stuff was kind of a fun thing of doing a nut stuff to something complicated and making it simple. And then I started writing it and then it became like, I suppose, a curated narrative of markets. Okay. And the curative narrative kind of gives you the template and the framework. So I'm not the violinist, I'm not the cellist. I'm kind of like, to a degree, I guess I'm like the conductor, you know. And I think, you know, brilliance is a lonely place, and that's not my brilliance, but it's other people's brilliance. I think people don't get challenged. I think most of the institutional fund management group is a very spoilt, rarefied group of people who get chauffeur-driven cars home at night a lot and eat in rarefied restaurants. And most of them didn't know who or what Greg's was, you know, 5 years ago. You know, they don't. To ask them to have a perspective on coal or marijuana or things is very difficult because most of the sell side firms don't cover these areas anymore. So it was just as I say, it was almost like a communications project that's morphed into, you know, really a curated narrative, the bridge from kind of politics, geopolitics into portfolio construction and ultimately trying to beat the market.
And I guess, you know, take us through for those that aren't aware of what this macro top-down means. What does it mean when you do something top-down rather than bottom-up?
Well, so it's a bit like Minority Report. There was that movie, Minority Report, and they were trying to, you know, do the pre-kills or the post-kills. Yeah. And they had all the screens, and I think it was it Tom Cruise? Or it was maybe Tom Cruise. And you had all these screens. And what you were saying is, you know, you had kind of your killer was there, right? So that's your portfolio, right? Your killer was there. Right. And then what you were doing is you were trying to bring in macro politics. You were trying to bring in interest rates. You were trying to bring in commodities, inflation expectations, consensus. And you bring all these factors into the mix. And then ultimately those create a kind of conduit into where consensus is, where it isn't, you know, and then ultimately it should all translate into a portfolio with 5 thematics and, I don't know, in my case, 50 odd stocks, you know, probably too many, but about 50 odd stocks.
And then as for the thematics, where do you get those ideas from?
Well, listen, I think the only thing you have after doing this for 30 years is, if you've tarted yourself around to the degree that I have, is that you end up with an extraordinary collection of incredibly, you know, talented people. And it goes back to what I said about brilliance being lonely, which is that there's a lot of people sitting on boats and houses and sitting in Palm Beach or in Monaco Caribbean this weekend, or Monaco this weekend, or wherever they are, who I think are very keen to share their brilliance and their insights with other people. Yeah. And so therefore, with Nut Stuff, kind of making it invitation only, kind of, you know, trying to not make it available to everybody, it was to have a sort of captive group, very little similar to what Nick's done with Curation. Absolutely. You know, we work a lot together. Is bringing in a captive group of people. And then I think people have confidence in feeding information in, you know, and as I say, you know, I've just been fortunate enough over the years to have met a lot of people who were very junior when I met them, and they've now become very experienced and very senior. And I think they like having a medium to bounce ideas off, you know, and I suppose I try and position myself as a sort of reality check. I call it a LOF, you know, it's you know, it's LOFW, look out the effing window. You know? And I think on investment, everyone does need to look out the fucking window, because I think, you know, where people miss the wood for the trees is, dare I say it, it's the arrogance of sitting in the West and looking east, rather than putting yourself in the east and looking west. And we can talk about wider issues, but those are big factors of what we do.
Yeah, and what, you know, going on to current themes then, you know, what do you think is important in the world at the moment?
I think it's a combination of the dichotomy between the West and the East. So I think if you look at where the West has come from, we don't even need to get into the rights and wrongs and wherefores of conflict in Ukraine or in Gaza or whatever. Yeah. The reality is the West has got appalling demographics. Mm-hmm. It's got appalling levels of entitlement. It's got very high levels of debt. And there is a huge bias to media, which is Russophobic, Chinaphobic. And it was interesting, someone said to me, why do you think Trump, you know, spent so much time sitting in Saudi Arabia in the Middle East? And it was an interesting statistic that someone said, which is that if he's sitting in Riyadh, he's less than 1,000 miles from 50% of the world's population. So I think the problem is, at the moment, we still think Washington and London are the center of the world. And they are if you talk to Mr. Starmer and you talk to President Trump. Yeah. But the reality is the world's moving on. And the US view themselves as having the cards, but they don't really have a very strong hand, because every single time they try to do something radical, the mod market ultimately calls into account, and they have no choice.
A little bit like Mrs. Macron this weekend.
A bit like Mrs. Macron, they get a bit of a cuff around the logo. And so I think you've got this fascinating perspective, and it's interesting. You know, you listen to some very preeminent economists, and I was listening to a podcast, you know, over the weekend. Someone say China's uninvestable, and I thought it's such an extraordinary concept to hear middle-aged men who've been in financial markets for 40 years, who are doubtless incredibly happy they've got a cellar full of gold bars, telling you that China's uninvestable. You know, I try and do 10, 15 countries a year just to go and do primary research. And you go to Kyrgyzstan, you go to Turkmenistan, you go to China, and you go and sit in a city like Shenzhen, and you look around you and you think, really, this place is uninvestable? You know, I mean, it's a lot of it is perception and consensus, you know, and as I say, and trying to articulate that maybe a little bit a couple of times a week in something that's readable.
I think I learned that when I landed in Johannesburg, so started to get into emerging markets, and eventually traded Joburg, Moscow, and Istanbul, and it was Turkey in particular that I realized was an absolutely incredible market for trading. Yeah. Some good investment stories as well. But what would you say, you know, looking at the S&P 500 today, looking at the NASDAQ, are people too laser focused on those, and maybe they need to just have a glance elsewhere?
Well, I guess it goes back to what I said before, which is that, you know, everyone's trying to hunt yesterday's prey today or tomorrow. You know, if the S&P or the NASDAQ were a restaurant, I would argue that between 30 and 35% of what's on the menu is just not stuff you really want to eat. No. And if you do eat it, it might likely, you know, cause you to sit on the loo all night. So, you know, I think it's less than just under 8% of global equity market cap sits in the 4 hyperscalers now. Now, I'm not saying that when NVIDIA report this week, they may not have barnstorming numbers and the world continues. But there is nothing priced in those for any kind of competitive threat, any kind of slowdown. And so I think you've just got to be incredibly careful. So I look at the S&P having done, I think including dividends, 12% a year, I think 12% a year annualized. Yeah. You know, I think the problem you have is, can the S&P continue to do that degree of compounding returns? The answer is probably not.
And there is a large chorus forming that it's more like 3 or 4.
Well, I think there's an interesting way of looking at this, which is that if you'd asked me 5 years ago, if you gave me any one of 4 or 5 major themes, technology themes or consumer themes, and you said to me, what's the best way of playing this with a $3 to $5 billion company that's got liquidity and everything else? Mm-hmm. 9 out of 10 times the stock would be a US stock. Yeah. In all those themes, retail, consumer, luxury, probably not, probably would have been a European company. I think the only interesting question today is, if you ask me that question today, are the European defense stocks arguably better than the US stocks? Probably. So even if that 9 out of 10 has gone to 6 out of 10 or 5 or 6 out of 10, the US at 75% of the MSCI All World Index is mispriced. It's overpriced.
Yeah.
Now, these asset allocation decisions take an incredibly long period of time to work out. So you're not going to get justice on this in the near term. But I think when you look at what's going on in markets today, and you look at that shift to emerging markets, you look at what's going on with the dollar, and I love the way Scott Bessent says the dollar's not going down. It's just that every other currency is going up. but the essence is effectively the same.
Yeah. Well, it's interesting over the long term. We always, when we're looking at markets every day, we expect things to happen quickly, right? But it was just a graph I saw since 2011, since the first debt downgrade of the US.
Yeah. The
difference in the US funding rate versus German funding rate, for example, is remarkable. And it's now at 190 basis points difference between borrowing money for Germany than the US. So, things do take time to play out, but when they happen, then they,
I think that's right,
smart.
and I think that's right. And this is the problem the US has, which is it's like living in a street, isn't it? And you live in a small house in your street, and there's a guy at the end of the road, and he's permanently buying new sports cars, and he's always marrying one more glamorous girl after another, and you're saying, and then the guy comes down and says, "Can I borrow some money?" And you're going, well, no. And by the way, if you want me to lend you money, it's not 6 or 7%. It's 8 or 9%. And it goes to another theme, which is I think that when you look at where the investment hurdle rate is, if you take where money supply is, you take where M2 is, you take where inflation is, your new outperformance hurdle is arguably 10 or 11%. And so the question really goes back to is, if the S&P can't do 12 or 11%, everyone talks about private credit, everyone talks about bonds, everyone talks about real estate. Really? I mean, even private equity, are you getting 12, 14, 15%? I mean, I can show you the data. I wrote about it last week. I can show you the data that says you're absolutely not. And so where this is going, which is ultimately there is an asset class probably that's very small and very nascent, and where the jury is out, and there's a whole swathe of the asset management industry that won't look at it, hasn't done the work, doesn't want to do the work. But I think that is one of the great arguments to moving into the digital world, and that's an area that I try to focus on, again, trying to explain it in words that I could have explained to my now departed 89-year-old father.
What do you think are some of the contenders for, you mentioned digital, but are there any other themes at the moment that could fall into those categories or locations?
I think gold, but I think the problem is, 60% plus of gold is owned by people over the age of 60. Mm-hmm. And so I think you go and talk to young people. I think young people think owning physical gold is about as dumb as owning a car. And so I think when you have this offload, from boomers, to the next generation, I think you're going to struggle to make the case for gold. But gold store of value, gold tangibility, of course, it's the goalkeeper in your football team. It's never the highest paid player, but you're a bit daft to play without it.
Yeah, it needs a rebranding, doesn't it? How do you make gold sexy again?
Well, I suppose you make it sexy by talking about tokenizing it. But ultimately, if you tokenize gold, there comes an element of there's many other things you could tokenize. I would argue that tokenizing oil or tokenizing natural gas is tokenizing energy is a much more exciting thing to tokenize than tokenizing gold.
Yeah. To change topic, any interest in UK stocks, whether they be large cap or small cap at the moment?
Huge interest in UK stocks. I mean, I think the amazing thing about the UK is that I'm sitting here drinking my coffee from Greg's, cheapest, best coffee, you ever buy,
right.
The cheapest breakfast anywhere. The UK is pretty simple. It's depressing, but it's simple, because it comes down to that whole adage of, if you're trying to explain to, 16-year-olds how to invest in the stock market, I would say you get a sheet of paper, put a line down the middle and say, right, where do you spend your money? What do you do with your money? And with the vast majority of the population, Uber's going to come up on there. JD Sports is going to come up on there. A whole plethora of companies that come up on there. Probably Greg's. KFC, who just announced over the weekend they're spending another $1.5 billion opening KFC in the UK. So when you look at when you look at that list of companies or those list of things you spend your money on, even if you double the price on it, people will still come back to those brands.
Yeah.
So their demand, they've got demand elasticity, but probably they're somewhat price ambivalent, a lot of them.
Yeah.
You know, and therefore I think that's the basis for your UK portfolio. So, and then the flip side of it is I go to the opposite end of it and I say, we have a pretty daft government at the moment who are doing some very daft things, you know, and I think daft is the best inoffensive word to use. But when I look at the suicidal policies that are there in energy, in terms of exporting relatively clean energy, importing, you know, dirty energy, you know, what we're doing at those particular levels, I can make the case that, and I've seen work, and some people very much smarter than me have done the work. You know, you can move the dice if you push net zero out to the right, and you give it credence and you give it respect and you give it credibility, but you have a workable solution to a longer term period on net zero, and you look at us doing net zero in the context of a global context of what everyone else is doing.
Yeah.
You can create and free a number approximately the size of the NHS budget.
Wow.
And that's needle moving in 1.3 trillion of government spending. And so everything I see the government doing at the moment is in $1 billion, 2 billion, 3 billion, you know, non-DOMs, tax fiddles here and everything else. None of it moves the needle. None of it, you know.
It impacts people, but it doesn't move the needle
Completely.
in the coffers. Yeah.
And so what really can move the needle, and I think what can move the needle, you know, is something like a big, you know, some big resolutions in there. So we own, and you know, I've had in the portfolio, you know, we've owned Kistos, we've owned Jersey Oil and Gas, we've owned some interesting North Sea assets that are frankly, you know, they're the one-legged red-headed stepchildren of the market, you know, and any kind of sign that things are freeing up or M&A,
Yeah.
then there's a huge amount of, you know, there's a decent amount of alpha in those.
Excellent. We can't let the interview go without saying a massive thanks to Nick Feingold for putting us in touch in the first place.
There's universal love for Nick Feingold.
Absolutely. He's been sitting in that seat right there. And I don't think I've ever seen the audience so quiet as they have been. Clearly listened to every word that you've...
Well, maybe it makes I bore them to death, probably, but...
Now, how do people find you?
So, www.nutstuff.co.uk. We have a Twitter account, we have a Telegram account. I try to write 2 to 3 times a week. I'll be writing today, but rather later than normal.
Yeah.
And as I say, it's trying to create a good read that's thought-provoking, that comes up with some ideas and some perspectives. You know, a lot maybe you'll see elsewhere, and a lot maybe that just, you know, a few nuggets that come out and make you think.
Brilliant. Well, we would absolutely love to have you back. So, you know, whenever the mood takes you, or if you've got some big ideas, then the door is always open.
Brilliant, Rich. Thanks so
Great.
much. Really
Cheers, Will.
appreciate it. Thank you so much.
We'll see you after the break coming up later in the show as well. Remember, Axel's Trade of the Week.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody. Wasn't that fantastic? So, we're starting to get some really interesting guests on the show here, and including the likes of Nick Feingold, Will, bringing you people with over 30 years experience in markets. So that is, really how I think we can get across those ideas and the themes. The recurring themes that come through your investments. So before we hit the old sessions running with 25 seconds to go, hit our subscribe button, please. Hit the like button on the page, and we're going to go live now after markets have been closed for those 3 days. Let's see how we're going to open up with this opening NASDAQ and Dow Jones. That is us off and running. What is the big rally going to come from? Well, it's come from Palantir. And it's come from NVIDIA. We're seeing there ahead of numbers this week. We're seeing NVIDIA up 2.6%. Tesla, even despite those poor numbers. So those numbers must have been in line. We're seeing them up 2.6% as well. What else is jumping out? We've got, Amazon just across the board, really. And that's going to be a bit more expensive for Luke to buy into his Alphabet. What do you guys think? Do you agree with Luke's theory on Alphabet there? Up 1.7%, so you'd have to pay 171.5 here. Nike, my beloved up 1.7. I'm still short puts at the 60 level, the 65 level, and the 67.5. So in other words, I am very long that stock, very long Nike. Right, Apple up 2% as well. So it's really 2% across the board of all those big NASDAQ names. We're not seeing too much differentiation yet. What about on the downside? Do we have anything? Probably unlikely with the futures so strong. But let's see. Let me just come out there. Yep, the boring old defensives not getting any love. AT&T, Johnson & Johnson at the bottom. Coca-Cola unchanged. So it's really all the action from Netflix onwards. So Netflix up 90 basis points, almost back to $1,200. Now, where is that compared with where it was at the highs? Let's check that on the graph. Yeah, almost back there, isn't it? Yeah, we've had an intraday move higher up to 1208. But what a strong company. Did anybody watch much Netflix over the bank holiday weekend? What was on top of your list there for viewing? So yeah, we've got what to do with Nvidia ahead of numbers. I'll tell you what, why don't we check out the expected move on that? Expected move on Nvidia for those numbers. We can see there $10 is the expected move going into Friday. So a $10 move, 72 vol. Actually not that big, is it? What's that? 6%. 6% move Nvidia on numbers. Interesting. That is not quite as much as I thought it would be. So yeah, if they're going to trade they're trading 134. So these are a little bit out of date. But if you thought that there's upside, maybe outside the expected move, yeah, 2.5. I think they're capped about 145 maybe. So selling. Yeah, you can get 80 cents for selling the 146. Sell 2 of those. That's actually quite an interesting trade, I think. Take the quantity of that second one higher. Now remember, this is off stale prices, so the prices aren't right because the stock is higher. But a 138, 146, 1 by 2 only going to cost you 80 cents. I think that's a really good trade. And then I might even look at selling something way down, like a 1. Well, that's going to go down in value as well, isn't it? So selling a 118 and making that I think will be my trade for Nvidia numbers. Selling a 118 put to buy a 138, 146 in 1 by 2 for a no cost. I'm going to refresh that at 230 when we get the numbers. But with a final check on how we're seeing UK markets, I'm going to hand you over to Mr. Aaron Bright to take you through. Yeah, very strong day on the FTSE actually. We'll take one last look. IAG up 3.3%, WH Smith up 3.2%, and Rolls-Royce, our subscriber number going higher and higher there. Rolls-Royce 857. Do we have anyone moving lower in the FTSE? No, I don't think we do we? No. No move lower. There is some somewhere, but it's refusing to give me it. Here we go. Fresnillo down 3, Rio Tinto down 1.2. That has not reacted well to that CEO leaving that we mentioned last week, remember, and rightly so. Finally, British American Tobacco down 50 basis points. we're going to go to a quick 2-minute break, and then Aaron is here to take you through.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hi, welcome back to Trade Live with IG. I'm Aaron Bright. I'm delighted to be joined by a fantastic investor, investment researcher, Tom Bailey from Han ETF. How are you doing today, Tom?
Thanks for having me.
Brilliant. No, it's our pleasure to have you. So, do you mind telling us a little bit to our investors about Han ETF and a little bit about your background, please?
Sure. So Han ETF is a ETF issuer, but we're a white label ETF issuer. So what that means is typically we will partner with third parties to bring ETFs to the European market or ETCs. So essentially how this works is there might be a US asset manager who runs successful ETFs in the United States, but as your viewers will know, you can't buy an American listed ETF very easily in Europe, especially on a platform. And so if they want to enter the European market, they have a kind of a choice to make. They can start their own European business. Mm-hmm. They can instead decide to try and acquire an ETF firm to get that footprint. But that's costly and it takes a long time. So instead, increasingly are looking towards using a white label service, so like Han ETF. So they'll come to us. So a good example is Sprott Asset Management. Obviously, they run their successful, various different fund types, but in ETFs included in America. They wanted to come to Europe. They came to Han ETF and then partnered with us, and we created the uranium mining ETFs we have with them. And then increasingly what we're seeing is European asset managers who have not historically had an ETF business, but now with the rise of active ETFs, they're kind of looking at how they can actually enter the ETF business, and instead of starting their own ETF business internally, Instead, they can come to us as a white labeler, and then we can collaborate to create the ETF together.
That's brilliant, and we can definitely touch on particularly active ETFs, a little bit later on. But what I'm keen to get going is asking any of our viewers here: does anyone own any thematic ETFs or Han ETFs in particular? I'd love to hear that. If you could write that in the comments below, that would be great. So the suite of Han products, it's mainly thematic, right? On the whole,
I'd say so we started in 2018,
yeah.
and this was a time when thematic ETFs were growing very rapidly. So we have, I think, very much made a name for ourselves in the thematic space.
Yeah.
But we've seen in the last few years a more diversification away to other areas. So we're still very keen on thematics. We've launched, a thematic this year, for example.
And for those who don't know, thematics are essentially ETFs which focus on a very niche theme. So we've got like defense. You might have one which just focuses on, say, uranium miners, that sort of thing.
Yeah. So we have recently we've launched more commodity and active strategies too. So it's a broader sweep of product types on the platform, but I think when you look at, say, an ETF issuer, so we're 7 billion AUM, started in 2017, first ETF 2018. Mm-hmm. We're not going to come to the market and create a S&P 500 ETF, because the only way you compete with your Vanguards and your BlackRocks,
right?
Yeah, you have to charge. You're going to charge 3 basis points, and it comes to a question of scale, and you're not really adding anything new to the market. Mm-hmm. Does 1 basis point, 2 basis points cheaper than Vanguard really matter? Probably not. Yeah. So obviously you have to look for differentiated exposure, different ways of different kind of strategies and different market access that you can do with an ETF, and that often lends itself to the thematics, but then also you can look in other differentiated areas too.
No, absolutely. We've got an interesting comment here from Maturin, who says, "I'm in Han's NATO Future of Defense ETF. This ETF is heavily weighted in US stocks." I mean, this ETF is, I think, probably one which has gained a lot of inflows, probably in the past 18 months, 2 years or so. I mean, what's, particularly, would you say, sort of from an investor's point of view, is particularly exciting about this ETF, as opposed to just sort of buying a collection of maybe 4 or 5 traditional defense stocks, I guess you could say? Yeah,
I mean, so, I think it's how the index is constructed is key here. So it is a defense ETF, but you get a basket of 60 stocks, and at the same time, each of those stocks is capped at 5%. So what you're looking at with the ETF is you want that diversification. Obviously, investors can pick their own individual stocks. Yeah. They might pair an ETF with individual stocks. It's a particular stock they like. But this is obviously, one basket, broad diversification across the defense and cyber defense space. Yeah. And so we have those various different kind of cappings in place to ensure it stays diversified. So no stock can be more than 5% at rebalance. So it will sometimes drift above 5%, and then we rebalance 4 times a year, bring it down to 5%. So, you see names like Rheinmetall have their massive runs, become a large part of the portfolio.
And you mentioned something really interesting there, because if someone typically thinks of a thematic ETF, and specifically defense, if I think of defense companies, I would think, Lockheed Martin, Northrop Grumman, but you mentioned that you're sort of across the whole ecosystem.
Yeah, so we kind of wanted to make sure this was a kind of diversified play. So we have essentially 2 buckets to the stocks that are included. So you have your traditional defense companies. So they must derive more than 50% of their revenue from the sale of military equipment. And it is, actually Lockheed Martin's not in there, but if you look at, say, like RTX.
The one stock I choose.
RTX, Leonardo, Thales, BAE Systems, a lot of the kind of conventional names you would guess to be in there are in there on that first bucket. And then we also have the cyber defense bucket. So this is the idea that, in this world of greater geopolitical risk, essentially,
it's a different form of warfare than, say, the Second World War, right?
Yeah, and so for this, we're ensuring that the companies included have to be domiciled in a NATO or NATO allied state, and also have a contract for cybersecurity with a NATO government. And so that kind of adds different tilt to the basket. And then obviously if you look at the financial factors of those stocks, right, the cybersecurity stocks to the traditional defense stocks, they're very different. Obviously, they're very growth orientated. They're not industrial companies, and so you get that diversification across the different factor set too. So it creates that more diversified tool, and also we think properly captures what the proposition is, because obviously you're buying this ETF on a basis that we're living in this world of greater geopolitical risk, and obviously while that means countries getting to 5% of spend on GDP within NATO, etc., and that's a key part of the story. The other part is this increased kind of shadow war in the background of cyber attacks, and both targeting government infrastructure but also private sector infrastructure. So companies, even if they're not directly seen as kind of facing a military threat, right? If you're a bank or you run energy infrastructure, you're still at risk of state-sponsored hackers originating from North Korea or Russia coming after your infrastructure in this world of greater kind of volatility.
Yeah, and I think this is the really interesting thing you mentioned there, because obviously it is a, very niche product. It focuses on one very specific theme, but it's not, reliant on all-out warfare. As you mentioned, there's, the risk of cyber attacks, the risks of various other things which don't result in sort of a battle in an open field or dogfight. So that's particularly interesting.
Yeah, and I think that kind of reflects taking a thematic approach rather than a sector approach. So you can do a sector, and you can have a subset of aerospace and defense sector, make some changes within that, maybe for a bit more purity. But what we're sort of kind of thinking, what's the theme? And the theme is essentially this world of kind of greater volatility, great power conflict, and so rearmament of European countries in particular, but also more military spending around the world is a key part of that. But then at the same time, it is this increased spend on cyber, often from the private sector.
Yeah, and just coming back to that comment there is a question about the defence ETF. Is the fund going to adjust to spread the risk with the current world events, so tariffs, or is it just more focused on just sort of these large geopolitical events, warfare, hacking, that kind of thing?
No, so we've not taken kind of an active approach where we're going to determine the composition of the portfolio based on events. Instead, it's an index approach, so the rules are written and it kind of is set in motion as that is. There are kind of key rules in there. So, for example, we require that at rebalance, it can be no more than 60% of a single country's exposure. Okay. So in practice, this means essentially capping US exposure. At least it did last year. This year, actually, we've not need to. It's not actually mattered.
We've seen a huge rally in European.
Yeah, so the European stocks. So, but last year, what it meant was that we were capping US down to 60% at rebalance, and then we were given an overweight towards Europe via that. So, that obviously worked out very well given the performance of European defence stocks over the past few months, particularly since the start of the year.
Yeah, no, brilliant. And we're really keen to find out about your ETF ownership, and if you've got any experience with thematic ETFs. So please feel free to ask any questions to myself or Tom in the chat section, or any comments you have at all. Obviously, you mentioned before, and I touched on it, the launch of the new ETF, which is the European Defence ETF. I guess, what was Hans thinking behind launching this product?
Yeah, I mean, we think about it for a while, and often we saw interest in our global defence ETF on the basis of this European rearmament stock.
I remember when that launched, the Future of Defence NATO ticker, and it just went crazy, the amount of inflows, and I'm constantly seeing updates about new record level of AUMs.
So and one of the most compelling cases for the ETF was this European rearmament story. So we'd get investors say, hey, why is there not a European version? And so we kind of judged it that there was demand in the market for a European focused version. So we launched that this year, and that's already grown to, I think, around 75 million over the past 6 weeks since it launched. So
incredible
strong growth. Yeah, obviously a long way to catch up with our global one, which is at 2.2 billion. But it's so rather than because you can take a view that maybe you have this ETF like your reader or viewer rather mentioned in terms of kind of adjusting exposure to events. I think it's not necessarily the job of Han to do that. It is to provide different products for investors then to construct their portfolio to express that view. So if an investor has a view that they've got global defence, but they want to increase their exposure to European, and now they have that tool as well. So it's about offering the choice through those different products. Yeah,
no, absolutely. I've noticed that we've got a question here. It's been deleted, but someone was asking for the ticker of the European ETF. But for Saxena, but yes, we can get that to you if you want to ask the question again. But if not, don't worry. He's asked it again. So the ticker for that one, let me just pop that up. Bear with me just a second.
So
I believe that ticker is Army.
Yeah, for the dollar line.
Okay.
For the sterling is Navy.
Navy, perfect. So that's the one for you, our Saxena. If you want to invest in that one, which you can do so on the IG platform. We offer, I believe, all of the Han products on our platform. As you mentioned there, you sort of said it's not Han's job to construct portfolios. That's sort of my job and other portfolio managers' jobs. I guess that's the interesting thing with thematics is they are what we would call, from a portfolio management perspective, idiosyncratic. So they're very focused on one specific area. Is that sort of the discussions you have with sort of portfolio management clients, sort of multi-asset investors like myself, that they're fantastic products, but they do come with obviously fantastic niche exposure, but that exposure is quite niche.
Yeah, so I mean, typically you'd get someone might have like a core satellite approach. So they might have their kind of your usual kind of broad diversification for either global active managers or just tracking MSCI World or something equivalent to that, and a bond exposure. And then they'll have kind of their satellite exposure, which is kind of their high conviction theme. So, you know, we're going to weight towards defense or European defense or whatever the theme is within that, and try and add that performance via having this kind of bucket of these kind of high conviction themes, which the thematics typically fall into.
Yeah, absolutely. I would sort of add to that, and that's the interesting thing, sort of from a risk management perspective with thematics. I mean, if you want to get exposure to a theme, fantastic way to do it without sort of buying a basket of stocks. You know, it's a very cost-effective way to do it. To just say, I want exposure to defense, I want exposure to uranium mining, I want exposure to. I mean, there's another ETF which is your GINS product, which is a tech. Sort of a tech growth one. So they're, you know, really, really easy and exciting ways for investors to get exposure to them. But in terms of sort of from my perspective, from a portfolio management perspective, our exposure obviously does need to be limited because there are risks. And that's sort of something which obviously we don't give advice on this show, but investors should be cognizant of that. You know, let's say, for example, that the defense, you know, we're living in a world where there's absolutely no war, no cyber attacks. Obviously, the defense ETF would suffer a little bit. So that's why it's important for investors to sort of understand the risks of the product. But seems to be that we're going into a much more dangerous world, obviously.
Yeah, unfortunately, I think the ETF has, as the theme itself, has legs for a long time. And look, I mean, obviously, a common question we get is around, you know, what happens if the war in Ukraine comes to an end. It doesn't make a difference, we think, to the theme.
Because there's still going to be this amount of defence spending in Europe, right?
And I mean, even the spending now isn't, say, to provide arms to Ukraine. Principally, it's about Europe realising the mistake they made over the last 30 years in underspend, and, you know, whatever the outcome is of the war in Ukraine, the reality is Europe has realised now that it did underspend. And at the same time, the US is not the reliable partner that it imagined it to be for the last 30 years.
For sure. No, really, really interesting that you mentioned that. We've got a really, really good question here from Kankam Gupta. We briefly mentioned active ETFs. How do they work and how are they different to say, a mutual fund? And obviously, you've got some new active partners that we mentioned who are partnering with Han to launch some active ETFs. Yeah,
so look, an ETF is essentially a basket of stocks that trades on a stock exchange throughout the day, and you buy that at the price you see on screen, right? Mutual funds, you don't. Typically, you get the end of day price. So I think the first point is it's very strange for a mutual fund that kind of in the 21st century, you can buy something without actually knowing the price you're going to get when you commit to buy it. It doesn't really happen anywhere else. I've had this experience
many times where previously where I worked, we managed a portfolio of mutual funds, a fund of funds. And when there was volatility and we were making changes to portfolios, you know, if there was a big change in the day, we didn't know if we were getting the good price or the worst price, or you know. So
I think that's so, you know, one way to think of it is essentially mutual fund and ETF tell you nothing about the underlying strategy, right? Because I think the last 30 years, since ETFs were invented in 1993, or the first continued existence one, 1993, 25 years in Europe. And they've become synonymous with passive investing in terms of tracking like an index, broad index, and then increasingly of thematic indices. And so they're often used synonymously with passive. So people say, if you say you're an ETF investor, people think you're just buying passive index-based products. The key thing is, though, actually, an ETF is just a fund structure. A mutual fund is just a fund structure. It tells you nothing about the underlying.
It's true.
How the stock's constructed. So whereas obviously with a passive ETF, you've got the index and then the portfolio manager buys according to the index. With an active ETF, essentially, you're just like with a mutual fund, it's the discretion of the active manager to pick those stocks according to what they think.
Yeah, I mean, we don't manage, our smart portfolios aren't, you know, wrapped in an ETF or a fund. But I mean, let's say they were wrapped in a mutual fund or they were wrapped in an ETF, our investment strategy wouldn't change. It would just be the vehicle, right?
Yeah. So rather than, you know, essentially it's a one-click process. You just buy the ETF. And so, you know, when investors then kind of considering, I think increasingly investors are going to have to consider, do they want, when they're looking at an active manager, do they want it via the mutual fund they offer, perhaps the investment trust they offer, and increasingly the ETF they offer. So a lot of asset managers will have already two very similar strategies offered in a mutual fund or an investment trust wrapper, and now increasingly there'll be the ETF one as well, which we think investors increasingly prefer. You get that live pricing. There's also tax efficiencies if the ETF's domiciled in Ireland,
Sure.
if there's US stocks in there particularly.
And the key thing I think for many investors here is the liquidity aspect, right?
Yeah.
Is the how quickly you can trade it compared to a mutual fund.
Yeah. So it's quoted on a stock exchange. It's trade it like a share essentially. So I think it's increasingly. So last year, active ETFs in Europe grew their AUM by 68%.
Yeah.
So it's definitely, we think, the trend towards the market. In the US, about 10% of all ETF assets are now active ETFs.
Yeah.
Wasn't the case just a few years
I
ago.
mean, for sure, it's the fastest growing investment vehicle, without a doubt. So.
Yeah, and so if the underlying strategy relies on publicly listed, liquid assets, why not have it in an ETF? Obviously, when it comes to private markets, property, you're not going to necessarily put that in an ETF. Doesn't quite work. But if it is publicly listed equities, publicly listed bonds, then why not put it in an ETF?
Yeah.
It's we think it's generally is just a better vehicle.
So there was a big launch recently with obviously Jupiter Asset Management.
Yeah.
So they've launched I believe it's a bond strategy. So it's just a similar strategy that they were managing in a mutual fund structure, but they decided to basically capitalize on this growing theme. ETFs.
Yeah, in this case, I mean, a lot of your users will just prefer ETFs, and so they want to reach out to expand their distribution capabilities, right? And they see also, I think there's also a kind of demographic split.
Yeah.
In particularly when it comes to fund structures, younger investors prefer ETFs, and so if you are an asset manager looking to essentially future-proof your business, expand your distribution, an ETF seems the obvious solution to ensure basically you're still appealing to younger, new investors.
Yeah, and I think the UK has got a lot of growth to do. I mean, obviously, Han ETF operates on the continent as well, the European continent. And I think in Germany, I mean, you're going to be more clued up with this than myself because you're dealing with these clients the whole time. But I mean, there's much larger uptake of ETFs in sort of Germany, France, Italy, right?
Definitely in Germany. There's this kind of the savings plans in Germany, which have kind of really been a big boost to private investor adoption of ETFs. So Germany is probably the most friendly market towards ETFs right now in Europe. It's getting there with France and Italy, both. So we have salespeople across the continent to tap into these markets. But it is interesting when you look at Europe, say, because we always compare Europe and the US, right? But the US is one country, Europe is not. So you have different uptakes in different regions within Europe, essentially countries, different jurisdictions. Sometimes that's investor preferences. Sometimes it's also based on local legislation and what it kind of what it's pushing investors towards. So
I think it's probably really exciting for Han because there's definitely appetite in the UK and there's probably really there's opportunities for growth, right?
Yeah, and I think a large part of it is essentially ensuring investors are breaking that synonymity between ETFs and passive in their head. That ETFs are simply a vehicle and should be their go-to vehicle for most of the strategies or asset classes they want exposure to. And I think that's still a long way. Like, I think you still get a lot of confusion around the term active ETFs because people have, if we read investment guides, it's talking about, you have a choice between you can go with a mutual fund or an OIC for your active exposure, you go with an ETF for your passive exposure, and kind of breaking that.
We're getting a fusion of everything really, because you can absolutely get a passive OICs as well. I mean, plenty of passive.
Well, so it's the kind of battle between mutual funds and the mutual fund structure and the ETF structure. It's happened before, right? Because there are open-end mutual funds which obviously offer index tracking. The first ones come from Vanguard in the 70s, right?
Yeah.
And then you get the first ETFs in the 90s come out, and it just so happened that they were focused principally on the passive approach, and there's also a time when passive became more and more popular. But then obviously you have investors have had the choice for several decades now. If they want to buy the S&P 500, they can buy an index fund, a traditional index fund, which tracks S&P 500, or they can buy an ETF that does it. And I think the ETF won that battle, essentially. Most people default now will go to the ETF for that passive exposure. So it's about ensuring, I think, or trying to encourage, basically, awareness that this is now also a choice you have in the in your active exposure.
No, that's brilliant, brilliant. Just moving away from, I guess, the more sort of, I guess you could say, nuts and bolts of the ETFs. I'm really keen to. We've got about 5 minutes left on this segment, so I'm keen to talk about some more really interesting themes, which our investors may wish to look at. Obviously, you mentioned uranium, and Han also have partnered with the Royal Mint to launch a a gold ETF, which is a sustainably sourced gold ETF. So really keen to hear about sort of Hans' thinking on these spaces and the room for potential growth if investors buy these ETFs. The potential growth.
Yeah, sure. So I mean, I'll start quickly with the gold ETF, or technically ETC.
ETC, yes,
commodity.
Absolutely, yeah.
But it works the same as an ETF, pretty much. So obviously, actually one of our co-CEOs invented the first gold ETC 20 years ago.
Pretty cool thing to have in your CV, yeah.
And every asset manager now has a gold ETC. We created ours in 2020, so we had to kind of think, how is this a differentiated offering, right? We just come to market with the same thing. It's not no one's gonna want to buy it. And so
that would be the same as the S&P 500, right? It's going to be a race to the bottom. I want spot gold exposure. This one's 5 basis points. This one's 4 basis points. I'm going to choose that one, for example.
So we partnered with the Royal Mint on this. So they came to us. They wanted a financial product. Obviously, they sell. You can buy gold as an investment from the Royal Mint directly. So they came to us to create this ETC. And for us, that offered a very kind of differentiated proposition, because the gold that backs ETC is all stored at the Royal Mint's vaults in Llantrisant in Wales, whereas typically an ETC's gold is, say, custodied with one of the big banks, probably buried somewhere underneath the Thames. And so we can say, look, the custody of the gold is outside the financial system, so you get that diversification on custody. So, if there is some sort of crisis for investors, it might offer some comfort knowing that actually the Royal Mint controls that gold in their vaults, and the Royal Mint is obviously owned by the government.
Yeah.
And then obviously working with the Royal Mint, it gives us more flexibility on the gold we source. So key was in 2022, we worked with the Royal Mint to essentially try and ensure that as much of the gold backing it is recycled as possible.
Yeah.
The idea being that gold is, it's a 90%, recycled gold is 90% less carbon intensive than mined gold. And so that way you can appeal to investors.
This is really exciting because I think many ESG conscious investors are always a bit concerned of gold. They want spot gold exposure, but they know how carbon intensive it is. How you've got to go into the ground, you've got to use all sorts of equipment to extract it, but this sort of eliminates some of that. Yeah,
so I would say kind of the two strands of investors. There's those who want that custody of the gold outside the financial system. Those who kind of, gold is obviously for worst case scenarios, so why not have your gold custody outside the financial system? And then you have your sustainability minded investors who, often you'll get these kind of multi-asset managers who will have a portfolio, sustainable one and not sustainable one. And in a not sustainable one, they're able to put gold in, and then they weren't able to put gold in their sustainable one. And this is offering them a solution to that, to ensure that actually you can still get exposure to that important asset class, which obviously has become more important in recent years, but in a more sustainable way.
Yeah. And I mean, sort of I guess gold has rallied massively. Do you still think there's upside for gold, given that we're at what, $3,500 an ounce?
Yeah, I mean, look, we don't usually do kind of price forecasts, but gold is rallying. Kind of, you have obviously the demand for gold as a hedge against risk, which obviously is still very present in the world today, and at the same time you have this kind of new interesting feature of increased central bank buying. Which is likely, we think, only to increase.
And I think from sort of a portfolio management point of view, we're just seeing so much geopolitical risk that, what else can be a hedge against that in times like this? Gold is traditionally a really good hedge against that. So that's what we're seeing, the potential upside for that potentially. Obviously, it's quite expensive relative to how it's been, but the theme of maybe gold price appreciation looks like it could continue.
Yeah, and I think typically you have gold as that risk management tool, the stability in your portfolio, and that's why you have it. Not necessarily, I mean, it's fantastic, the gains we've seen, right? But you have gold as that kind of insurance part of your portfolio.
We've got one last question just from someone called Cucumber, around nuclear energy and its potential growth. So with all the recent buzz around nuclear energy and its potential growth, is buying physical uranium a smart investment? And if so, where would you keep it? In a safe or under your pillow? That's quite a difficult question for someone who works for an ETF company. But,
well, I mean, you most people can't buy physical uranium.
Sure.
It's illegal to do. So don't try or look on forums of how to do that. So the first part, there's a very strong case for investing in uranium. We've seen the executive order talk from Trump in terms of speeding up nuclear building in the US and securing the US uranium supply chain. At the same time, if you just look at the numbers in terms of how much uranium is produced per year, terms of what demand is from current existing nuclear reactors, the uranium market is in a massive deficit and has been for a few years. And as we see more and more nuclear power plants come online in China and now potentially in the US, that deficit's only going to widen, but it takes a long time for production to increase from these mines, particularly they were very undercapitalized the last few years. And so there's a very strong investment case for uranium. And then if you want, so one way people do it is obviously buying the miners, and we have an ETF providing exposure to the miners as well as some physical exposure.
And that's through the partnership with Sprott that you mentioned.
Yeah. And then we created a physical uranium ETC rather recently. And this essentially wraps Sprott's physical uranium trust into an ETC wrapper. So Sprott has contracts with various different uranium, so for example, Cameco and Iran in France, Iran, not Iran, just to clear on this topic, who store the physical uranium. So you can get that exposure via the ETC to that physical uranium if you just want that physical uranium price as well. So, we've seen physical uranium price go from like lows of $20 a pound a few years ago, went to a high of around 107 back in early 2024, came off a bit, and we're at about $70 a pound now. So, we think it's a very strong investment case given the kind of long-term structural story, and then also from a tactical moment in terms of where the price of uranium is now, where it's just been for the last few years.
Brilliant. Thank you very much, Tom. That was fantastic. Up next, we've got our favourite technical analyst, Axel Rudolph, coming up with Technically Speaking straight after. And please like and subscribe. Thank you very much.
Thanks.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, a lot of financial advertising can be quite dry, a little bit kind of wallpapery, and I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they were doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. At IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Welcome to Trade of the Week on Tuesday, the 27th of May 2025 from the Bourgogne in France today. So you can probably see behind me here a photo of some vineyards. I've actually got them outside of the window here. Nice white and red wines to be drunk. But I've just been told by the Gabriel to stop bragging. So let's go into trade of the week. I would like to go long the NASDAQ 100 for technical reasons. As you can see here, we've got a long-term uptrend since the 7th of April low. And once again, we are heading higher as President Trump pushed back his 50% tariff threat on the European Union, on European imports into the United States to the 9th of July from its first date of the 1st of June. So that has led to a relief rally yesterday, as you can see here, which is ongoing. And basically, the trend is likely to continue. And for that reason, ideally, what I would like to do is wait for a minor pullback if there were to be one to last Friday's high, this red candle here, to around 21,180. And I would place my stop loss below this uptrend line and below Friday's low at 20,675. So today's trade of the week is to go long the NASDAQ 100 at around current levels, or ideally slightly lower at 21,180 with a stop loss just below last Friday's low at 20,675 and an upside target around the 22,000 mark. Let's go into technically speaking now, and let's look at last week's trade of the week, because that was to go long the British pound against the US dollar here at 133.60. And you can see here that basically that trade so far worked out very well indeed. We broke through that downtrend line, which is why we went long, and we have been long since. So you can either cash in your profits now, or you can move your stop loss from that low to your entry level. So it's in theory a free trade on now, and let this one run, because my longer term upside target is slightly higher at 138.50. So you can see here, that's the weekly chart. So I'm not averse to a further advance in the British pound against the US dollar towards this free resistance area here, which would take us close to the 140 area. So maybe around 138.50, 139 is our next technical upside target. You can see here with that very nice bullish week here with regards to the British pound against the US dollar, as the US dollar continues to weaken amid all this turmoil created by President Trump and his tariff threats. I've just heard that we've got a question, so let's look at your market. Okay, can you just give me the codes, please? So Zenith Energy Limited. So this is one. So it's not this one. Okay, it is this one. Sorry, I need to rely on the gallery here because I have got the whole setup that we have normally in the gallery in London. So what can you see, and what you can see yourself on this chart is a very, very nice up move here today. I don't know what the fundamental reasons are for this, but as a technical analyst, I don't need to. Let's just look at a longer term time frame, because obviously you always look at the longest term time frame possible. And from the 2017 high on the spread bets, you can see here that we've now taken that out. We're trading all-time highs. It looks to me as if, yes, I mean, this is looking very bullish, and the odds are greater for that uptrend to continue and for it to head higher still than for it to reverse to the downside. So the question is, if you buy it now, where would you put your stop loss? So where's support? Well, you've got the high from Thursday of last week, and you've got, more importantly, the high going back to the 31st of January. So that on this daily financial bet would be around 1170. So in case of a retracement lower being seen, that would also take out today's huge up move here and invalidate that. So once that were to happen, if that were to happen, that view is probably wrong with regards to the bullish upside. So you could have a stop loss below basically the low seen on Thursday, which one here, that would be 12.15. If you wanted to have a retest of that previous high from January and place it below that, just in case that were to be retested, and you believe that fundamentally the chart is going to continue to rise, maybe you place it below the next relative low, which is this one here. Relative low, as we know, is the low below the low on the left and the right. And that one would be from the 19th of May at 10.40. So you could place it 10.39, your stop loss here. If that's too far away, maybe just below today's intraday low here at 12.47. But yes, the trend is your friend, especially if you've got an acceleration to the upside. So unless that were to suddenly reverse to the downside today, which sometimes happens, but here, to be honest, looks pretty unlikely at the moment, we would expect that uptrend to continue. The question is, now that we're trading all-time highs, how much higher can we go? So what we do is we take the lowest level on our chart from the last up move. So you can see here we had lower levels, then we jumped higher, then we sort of drifted lower, and then we jumped up again. So here we've had an up move, and then we had a decline, and here we had another up move. So what we can do is from the last up move here, go and trace a Fibonacci extension. So if we were to do that, you can just click on here, on that pen, you go down to Fibonacci extension, click on there, and then you take the lowest level here that we were trading at and connect that low up with the highest level of this uptrend you've seen before a correction to the downside or a sideways moving trend happened. So that was the high going back to the end of January. And then you go down, projected from the lowest point of that correction. But you can see here, that was a low point, and then we had a slightly low one here because we just traded sideways all this time, which was this one here. So you would connect it up to that one here. Once you do that, you will see this line here pop up. It's 100% extension of this up move. So basically replicates this up move here. So that comes in at around 17.25. That would be our next technical upside target. And then above that, far more importantly, you've got the 161.8 Fibonacci extension, which is what a lot of technical analysts would look at, which is this one here, because it includes the golden ratio. And this one comes in at 23.74. So from a technical perspective, a longer term target would be around 23.74, provided that this current trend continues to the upside. So from that point of view, these are the technical, not the fundamental, but the technical upside targets that you can see here. I don't think we have a tip rank score. Oh, we do actually. So this one is neutral, but that one probably was from before today. So that might change over the next few days. So look at it here and look also at the fundamentals. If you want to know more about it, here there are no fundamentals, but you can see the tip ranks is quite often interesting with regards to what's going on here. So going back to the chart, bullish, provided we stay above today's lows. That's the short answer here. I've got another question here on dollar yen. Dollar yen, as we can see, the US dollar has depreciated quite significantly over the last few days, has fallen through this uptrend line here, which we can now delete. And today we made a low, but can you see that low was made slightly below that low on the 6th of May and then slightly above that low here on the 28th of April. So if you have a confluence of levels, so different support levels, lows coming in at similar levels, that quite often acts as support, and that's exactly what happened today here. And we've got a reversal. So you can see here short term, we might bounce back, but longer term, we can still see that we are in a downtrend, and that as long as we stay below the 12th of May high at 148.65, the downtrend is very much intact. And what we're seeing here potentially is just the beginning of a small correction against the longer term downtrend, but that we could perhaps use again in the future here, for example, to go short in the direction of the trend. Because what we want to do is to always trade in the direction of the trend, because the odds are greater for us to be right than wrong. I've got another question here. The gallery text tells me, what is the market we're looking at? Do I still recommend? Well, I don't recommend anything because I'm not allowed to give you advice. But would I still hold my British pound long position from last week's trade of the week? I personally would, because the upside target I had in place is 138.50, sort of around that area. Yes, short term here, we are consolidating a bit. But you can see the strength in that chart is still very much intact. So if you had a quick trade on there and you know a shorter term trader, by all means, if we were to fall through today's low, maybe you can just get out of it. And if you're wrong, if the market then makes a new high above the highs seen on Monday at 135.93, you could then perhaps just get back in again and let it run. But from a medium-term trend perspective, look, we've had an up move, we've had a consolidation, and we continue the up move. We've broken through the downtrend line. We have a strong uptrend here on Friday of last week, all of which leads me to believe that that uptrend is likely to continue. Plus, if you look at it, there isn't any resistance now. Look, what we've got is really good support here above our entry level. You know, you've got the September highs, you've got the highs going back to late April, all of which should hold in case of a retracement to the downside being seen. You can see the uptrend still very much intact also from the beginning of the year. So for those reasons, I would expect that uptrend to continue, not just for the next few days, but probably for the next few weeks. And you can see here, we've risen very sharply, sort of a 45-degree angle. Yes, that angle may basically lose upside momentum, and we may have a less steep uptrend in the future. But the next resistance area, short term, would be this high from mid-February around 136.43. We are very close to that. But the next bigger one, which is more important, is this one here, the 10th of January high at 137.48. And then we've got all this resistance area here where we sort of traded for 2 or 3 months between July and September of 2021, which is my upside target. So I wouldn't be surprised if we were to head into that direction. Sorry, and now I've got another question from the gallery. Pardon? Canal Plus, since we're in France, let's look at Canal Plus. Oui, on va faire ça. Right. So, Canal Plus, sorry, I couldn't hear the English accent of my gallery there. I wasn't sure what they were talking about, sorry. But what we can see here is that we have formed a sort of saucer bottom. And what that basically is you sort of grind down into a bottom, and then you sort of slowly make your way out of it. But it's encouraging because what we've seen now is a rise above the late March high here on this daily financial bet at 199.72. We closed above there on Thursday of last week. We managed to hold there on Friday, and today we have further upside taking us now to this resistance area here, the 22nd of January high, which we're currently testing. I wouldn't be surprised if we were to break through that and then try to also overcome the 7th of January high, which would then leave us the way open to basically test these mid-December highs towards 235, 240. But yes, and the fact that we've closed above here does suggest that further upside is more likely than downside. We are currently, though, entering, as I said, into this resistance area, so we might short-term stall there for a few days, but the trend is pretty healthy. And for me, it will remain so as long as we stay above, not just the first reaction low here, but the next bigger one, this one down here, the mid-May low that was made at 174.30. So as long as we stay above there, because from there we had this huge bullish candle on the 15th of May. So if that gets taken out, something has changed in this trend. Unless that happens, the trend, as you can see here, we've got a series of higher highs and higher lows, is still very much intact. It doesn't look at the moment as if we're seeing this sort of sideways correction here, but instead further upside does look more likely to happen here. But as I say, we need to ideally also take out the 7th of January high at 214.10 on this daily financial bet for us to then head towards the 240 area or so. But yes, it does look pretty good here for the bulls from a short-term perspective. LNT. Our monkey man asked me about LNT? Lockheed. Okay. Yes, I know Lockheed Martin. Let's have a look at that. And this is the beauty of technical analysis. You don't need to know anything about the, not that I don't, but the fundamentals of the share or the market you're analyzing. But you can just gauge by the chart what is actually going on with regards to the price action. So what I always do is I go to the longest time frame possible. And this is a monthly chart. And you can see here we go back to the early 2000s. And we've had an uptrend. We had a series of higher highs, higher lows, but you can still see here very clearly an uptrend taking shape. Now, what has happened is that we've come off for about, I believe, 6 months in a row to the March or February low even here, then retested that February low in April with Donald Trump helping us down on the 7th of April with Liberation Day. But since then, we've had a really positive candle here on the monthly chart, a bullish green candle, taking us from that support area, which, by the way, was also the low back in February 2024. So you can see previous lows quite often act as support, or even if short-term breached, do act as support when the market then turns. So that is looking quite encouraging because it is telling us that we had a test of that support, tried to go up, had a retest, and a retest is even better than a test because it's a second test of that support area, and buyers came in once again and pushed the price higher. What we want to see now is a rise above the March high, which was made here on the daily financial bed at 49,429.5. That's the level we want to take out. And let's have a look at the weekly chart and see whether we are in the process of doing that. So what can we see here on the weekly chart? Well, we've got a downtrend channel. And we are currently trying to break out of that channel, but we are not in a bullish channel at the moment. As you can see here, we're trading sideways. But if you look at the sideways trading range that we can see on this chart, what we can also make out is that we've got potentially some sort of triangle formation going on here. So if you look at this, have a look at that. Can you see here? Got lower highs, but on this point here, we also have slightly higher lows. So potentially, this is a sideways trading range, but potentially, provided we stay above the low seen on the 21st of April at 44,276.5, the odds are probably greater for it to turn to the upside and then break out to the upsides. So if we then look at the daily chart, we can see here the same triangle formation. We can see that we tested on Thursday these lows, but made this Harami pattern. This on a bar chart would be an inside day pattern, and today broke out of it to the upside. So if you wanted to trade it short term, you could do so, go long if you wanted to, and put your stop below that low. Because if that's an uptrend, that's just a correction. It could take you to that resistance line, break through it, and then head higher again. If you want to go short, well, you probably know where your stop is. You wouldn't put it just up here, the 21st of May high, but probably below the next higher one here, the 2nd of May high, which is around 49,075.5. Because if we were to break through that downtrend line here, or that resistance line, and rise above that last reaction high, that high here, then most likely we're breaking out of the sideways trading range to the upside. And then the upside target could be the distance from that high on the 21st of January to the low seen here in April, projected to the upside. So that could take us all the way back towards, I don't know, the 55,000 area or so, quite easily. So right now, sideways trading range, short-term bullish buyers, resumption of the previous 5 days up advance here that we saw between the 15th and the 21st of May, provided we hold above the Thursday 22nd of May low. Further upside looks to be more likely than any downside. Now, if the downside were to happen, you know where your support levels are, 14th of May and more importantly 22nd of April. Provided we stay above here, we're just in a sideways trading range. This is basically it. It's 10 o'clock, time for me to go here with Technically Speaking. And thank you very much for watching today. Goodbye. Thanks, everyone.